Good evening, everyone. Time for another silver update. This is the weekly chart of the WTI crude oil contract provided by netdania.com. You can click on the link below. Now, there's some important breakouts here in this crude oil price. You can see here we're almost at 108. I've drawn in a couple of trend lines here. You can see they've both been broken through to the upside. We're looking at about 115 resistance before we make a run at that old high. Now, we have this kind of cup and saucer formation that happened back in 2007. You can see that presaged this run-up that ran for over a year, about 16 months of more than doubling in the price of oil. And that was a breakout of the MACD with an extended run here. You can see that the MACD is now broken out to the upside through the zero line. It's getting ready to cross over through this point. So if that pattern holds, and I have no idea whether that pattern will hold or not, but if that pattern holds, you can see we're projecting an oil price of $200+ a barrel. That's going to mean for gas? Perhaps $10 a gallon gas. So it looks like we're moving into some type of stagflationary period, maybe somewhat similar to the 70s. But I want to look at the news out of Detroit today. Before we do that, I wanted to highlight this Peter Schiff release that we had. Very interesting. Peter Schiff has released a 14-page report called The Powerful Case for Silver. I'll read a little bit of this. I'm a well-known gold bug because of my strongly voiced opinion that gold has been one of the best assets for protecting yourself from the US dollar's prolonged decline. Lately, the precious metals have been taking a beating, and I've been called to defend gold's future prospects in the media countless times, etc. This 14-page report contains an in-depth analysis of what I believe is the strongest arguments for owning the white metal. What follows is a general overview of the key arguments I make in the report. The people's money. After a couple of generations of purely fiat currency in the United States, a lot of people have forgotten that money used to be backed by something of value. Gold and silver. It wasn't until 1965 the U.S. stopped making its dimes and quarters out of 90% silver, and the dollar was backed by gold internationally until 1971. Now he goes on and talks about some of the fundamental factors. Of course, we talked about these a lot. Growing industrial demand. Silver conducts heat and electricity better than any other metal on Earth. It is also antibacterial. These amazing properties make silver indispensable in a vast array of modern industrial and technological applications. Undervalued relative to gold. I'm not going to read all this. You know all this. And so Peter Schiff is jumping aboard the silver train. That is fantastic to see. I know a lot of the important investment advisors have kind of shied away from silver. It's good to see Peter Schiff stepping up and recognizing the value of silver. Now, of course, he doesn't mention the suppression of the price of silver. Silver is the most suppressed investment out there. There's a vast conspiracy against silver, but it's good to see someone else on board. So let's jump over to this huge story with Detroit declaring bankruptcy today. Now, I've talked about this multiple times in the past. It's finally happened. Detroit has declared bankruptcy, and Kevin Orr, who's the emergency manager, he had made an offer to the creditors and the unions, and that was rebuffed. So we'll read a summary of this. Instead, numerous factors over many years have brought Detroit to this point, including a shrunken tax base and still a huge 139 square mile city to maintain, overwhelming health care and pension costs, repeated efforts to manage mounting debts with still more borrowing, annual deficits in the city's operating budget since 2008, city services crippled by aged computer systems, poor record keeping, and widespread dysfunction. All of that makes bankruptcy a process that could take months, if not years, and is itself expected to be costly, particularly complex. Quote, "It's not enough to say let's reduce debt," said James E. Spiato, an expert in municipal bankruptcy law at Chapman and Cutler. "At the end of the day, you need a real recovery plan. Otherwise, you're just going to repeat the whole thing over and over again." The municipal bond market will be paying particular attention to Detroit because of what it may mean for investing in general obligation bonds. In recent weeks, as Detroit officials have proposed paying off small fractions of what the city owes, they have indicated they intend to treat investors holding general obligation bonds as having no higher priority for payment than, for instance, city workers, a notion that conflicts with the conventions of the market, where general obligation bonds have been seen as amongst the safest investments and all but certain to be paid in full. Leaders of public sector unions and municipal retirees around the nation will be focused on whether Detroit is permitted to slash pension benefits despite a provision in the state constitution that union leaders say bars such cuts. So we're going to look at that provision, but before we do that, let's look at the proposal that Kevin Orr made, and this was back in June when they first announced this, that he'd been appointed. And if you look at what he said, it's very, very ominous for the retirees. Orr has warned that without millions of dollars in concessions on bond and pension debt, the city risks going into municipal bankruptcy. He met last week with about 180 bond insurers, pension trustees, union representatives, and other creditors on concessions needed to keep Detroit out of bankruptcy. His team said Detroit is defaulting on about $2.5 billion in unsecured debt and is asking creditors to take 10 cents on the dollar of what the city owes them. Underfunded pension claims likely would get less than that. So did you hear that? That means that your wonderful, too good to be true Detroit municipal retirement was too good to be true by a factor of tenfold. You're only going to get 10% of what you were promised. Now, let's look at that state constitution section that talks about this. This is the section of the Michigan State Constitution, Public Pension Plans and Retirement Systems Obligation. The accrued financial benefits of each pension plan and retirement system of the state and its political subdivisions shall be a contractual obligation thereof, which shall not be diminished or impaired thereby. Financial benefits arising on the account of service rendered in each fiscal year shall be funded during that year, and such funding shall not be used for the financing of unfunded accrued liabilities. So this constitutional clause that they're citing, well, first of all, it states that it's contractual, so obviously the law of the turnip applies. You can't get blood from a turnip, so if a contract is you can have an enforceable contract, but if the damages aren't there, you're not going to get the damages. But it's very interesting that this same clause that the unions are citing actually has the section that talks about the way it should be funded. Now, it's very clear they never followed this. So why didn't they follow this? Well, we're going to find out that actually they never did have to follow this. This article is talking about the legal obligations of the public sector pensions, and this paragraph here is talking about a state Supreme Court decision regarding that. Now, you know that the Constitution is interpreted by the Supreme Court, and this is what the Supreme Court of the state of Michigan said. While the state Supreme Court ruled that retirement costs are not supposed to be deferred under the Michigan Constitution, the court also ruled that it does not have the power to prevent the governor and legislature from deferring them. On the whole, while the state constitution clearly requires the state to pay retirees the pension benefits they have accrued during their working years, the court does not have the power to mandate that these benefits be pre-funded. So, a lot of people are citing the Michigan State Constitution, and we know, based on the Supreme Court's interpretation of this, that basically it's toothless. It doesn't mean anything. The pre-funding, it was never enforced, and that's obvious because we're talking about a 90% haircut. Where's the money? Where did the money go? Well, they never had the money. They spent the money. That's the same thing with all of the federal Ponzi schemes, Social Security, and we're going to find out very soon that all the rest of them, same thing. But the situation is actually much, much worse than that. A lot of people have talked about the fact that when pensions go bust, at least they can be bailed out by the PBGC. That's the Pension Benefit Guarantee Corporation. Well, that's actually not going to be the case because the Pension Benefit Guarantee Corporation is an independent agency of the United States government that was created by the Employee Retirement Income Security Act to encourage the continuation and maintenance of voluntary private defined benefit pension plans. And these private pension plans keep pension insurance premiums that they pay. So the retirees, municipal retirees from the city of Detroit are not covered by this PBGC. So when this thing goes down and they're told that they're going to take a 90% haircut, they're not going to be able to go to the PBGC. Now, even worse than that, if it could be any worse than that, it is also true that they don't have any Social Security. The states and municipalities are allowed to opt out of Social Security. This is an article from WXYZ, again, about Kevin Orr. And you can see at the bottom, Taylor says he believes the health care will be on the chopping block, forcing the retirees to use Medicare, but he hopes the pensions are protected by state law. Quote, most of the retirees live on a fixed income and their pension is all they have because the city of Detroit opted out of Social Security, so the retirees only have their pensions. They're worried right now, says Taylor. So this is the end result of relying on the government to take care of you. You're going to take a 90% plus haircut. You're not going to be bailed out because you're not covered, you don't have any insurance, and you don't have any Social Security because they wisely or unwisely decided to opt out of that system. So you can see that the massive haircut that the public municipal employee retirement system is going to take is going to be absolutely devastating. Now, of course, the situation has been exacerbated because we've already talked about the lavish benefits, of course, which never could be paid and aren't going to be paid. Many of the retirees that are already retired no longer live in Detroit, but have actually moved out of state in Florida and other places. So this is one gigantic disaster in every way, and it's coming to a city, a county, a state, and a country near you. And you're going to find out that everything that you relied upon, everything that you were promised, everything you were expecting isn't going to be there. And you'll probably end up being happy to get a 90% haircut. So Let's look at silver. Silver is undervalued. We have Peter Schiff coming out now, jumping on the silver bandwagon. Those people who bought silver right here at $49.80 and are now sitting at about 20 bucks, down about 60% on their investment. They're certainly not down 90% on their investment, and those who've stacked physical silver can probably expect a large appreciation in the future as more and more people find out that the money that they've been promised has already been spent. There are hundreds of people playing the game of musical chairs, and there's only about 2 or 3 chairs, and when the music stops, they're all going to try to sit down, and they're going to find out that they're going to have to take massive haircuts. Whereas those who have been stacking physical silver for their retirement is not based upon a promise by someone else. It's not based on a contract. It's not based on a constitutional clause that's been abrogated by a court. It's not based upon some government insurance fund. It's based upon the inherent value of silver. And in the end, those are going to be the only people who have a seat. And we'll talk to you next time.